Today's market update. I'm Carol Dewey, founder of Perpetual Wealth Financial. And if you've been feeling uncertain about what's happening in the markets, you're definitely not alone. But today I have some good news to share. One of the rarest and most powerful buy signals in market history just triggered. It's the Zweig Breadth Thrust. And historically, it's meant one thing: massive opportunity. In today's session, I'll break down exactly what just happened, why this signal matters, and how it aligns with several other bullish technical and fundamental shifts that are underway right now. If you've been waiting for clarity, today's your moment. So let's go ahead and dive right in. Now, sometimes the market whispers and other times it shouts. Last week, the market didn't whisper, it roared. A Zweig Breadth Thrust, one of the rarest and most reliable technical indicators in market history, just triggered. If you know your market history, you understand how big this is. If not, buckle up, because this isn't just any buy the dip signal. It's the mother of all buy the dip signals, and it just lit up the tape. So what is the Zweig Breadth Thrust? The late Marty Zweig, one of the most respected market strategists of the 20th century, developed the indicator. It flags the moment when bearish sentiment burns out and a powerful bullish reversal is underway. Here's how it works. It tracks the 10-day moving average of advancing stocks on the New York Stock Exchange. When that average surges from below 40% to above 61.5% in 10 days or fewer, the signal fires. That's exactly what happened last week. So why does this matter? Since World War II, the Zweig Breadth Thrust has triggered only 18 times. And after each one, the market was higher 6 months later, 100% of the time. The market was higher 12 months later, 100% of the time. And the average 12-month return after a Zweig Thrust was up 25%. Now let that sink in. 18 for 18, 0 false positive, massive gains. Do you see why I call this the mother of all buy the dip signals? But it's not just the Zweig Breadth Thrust flashing green. A perfect storm of bullish technical signals is forming right now, all pointing in the same direction. Let's run through the recent fireworks. The 70% advancers signal. Over the past 10 trading sessions, 6 have seen more than 70% of stocks on the New York Stock Exchange close higher. So how rare is that? Going back to 1950, it's happened just 7 times before. And after each of those, you guessed it, stocks were higher 6 months and 12 months later. The average 12-month gain was up 23%. This is what it looks like when broad-based institutional buying re-enters the market. Not just a few mega caps dragging the tape, the whole market is lifting. And the Bollinger Band is reversing. 2 weeks ago, more than 70% of S&P 500 stocks were trading below their lower Bollinger Band. Bollinger Bands are technical indicators that measure price volatility and extreme conditions. When stocks trade below the lower band, they're considered oversold and often excessively so. Fast forward to the end of last week, not a single stock in the S&P 500 is below its lower Bollinger Band. That flip from deep oversold to full recovery has happened only a handful of times since 1990. And again, every time, stocks were higher 12 months later. Average gain, up 16%. That's a powerful whiplash reversal, and it's happening right now. So is there a breakaway momentum on the horizon? Well, the breakaway momentum breadth thrust, perhaps the only signal as legendary as Zweig's, is on the verge of triggering too. So here's the setup. It triggers when the 10-day ratio of advancing to declining stocks exceed 1.97. Historically, this has happened only a couple of dozen times since World War II. Stocks went up 12 months later, 95% of the time, with an average return up 21%. As of today, we are this close to triggering the breakaway momentum breadth thrust, especially considering the following. If we get 1,660 net advancers today, it triggers. Or if we get 3,030 net advancers across today and tomorrow, it also triggers. That's within reach, and the market momentum says it's possible. The fundamentals are lining up. The best technical signals come when they're confirmed by the macro picture. That's what we're seeing now. This is not some technical bounce in a vacuum. The fundamentals are shifting fast and in bulls' favor. Trade war tensions, for one, are thawing quickly. The Liberation Day tariffs shocked the market in early April. But since then, we've seen tariff pauses, widespread exemptions, and a significant softening in trade rhetoric. As a result, the average effective U.S. tariff rate has dropped from 27% to about 20% in 3 weeks. Some trade deals appear on the way in May with Japan, India, Vietnam, and others, while China trade deals look possible in May or June. And that could push the average tariff rate down toward 10%. The direction of trade policy is and should remain decisively positive. Meanwhile, we are starting to hear chatter of the Fed getting back into rate-cutting mode. The Cleveland Fed President Beth Hammack said last week that the Fed could cut rates in June if the data is clear. We think it will be, especially with trade easing and inflation softening. That sets the stage for a rate-cutting cycle into year-end. And maybe most importantly, earnings are holding up. The first quarter earnings season is off to a strong start. Last week, for example, Alphabet reported blowout results showing that AI spending, ad demand, and cloud strength are all alive and well. Plus, early reports from AI infrastructure companies like Texas Instruments and Lam Research have been bullish too. Same with early reports from AI software firms like ServiceNow. So what is the final word? Let's recap. The Zweig Breadth Thrust just triggered. 100% success rate since World War II. The 70% advancer signal, last 7 times, equaled all gains. The Bollinger Band reversal, consistent 16-plus gains. The breakaway momentum thrust nearly there, 95% success rate. Tariffs falling, Fed pivoting, earnings strong. This is what market liftoffs look like. This is Wall Street's version of all systems go. If you've been waiting for clarity, this is it. The technicals say buy, the fundamentals say buy, the tape says buy. The Zweig Breadth Thrust is a once every few years gift to investors, and when it hits, history tells us you want to be long and strong. The last time we saw it was in March 2023, which was right before the market launched into the AI boom. Now we're seeing it again with even more fuel. So don't overthink this. The opportunity is here. The signal has fired. As you can see, this isn't just another bounce or headline rally. The combination of the Zweig Breadth Thrust, 70% advancers, a Bollinger Band reversal, and a possible Fed pivot, all against the backdrop of improving trade and solid earnings, points to something much bigger, a major inflection point in the markets. If you've been hesitant to stay invested or unsure whether it's time to re-engage, the historical data, technical signals, and improving fundamentals all suggest that opportunity is knocking loud and clear. So don't forget, if you want to make sure your personal retirement and investment strategy is positioned to capture this potential, download our free guide, Tariffs in Your Retirement, 5 Practical Steps You Can Take Now, and you'll find the link in the description or on our website. And if you'd like a personalized look at your plan, you can schedule a lifestyle and legacy assessment directly with me. Thank you for tuning in. Stay strategic, stay optimistic, and I'll see you next time.